Hello, Renisha from Commodities Research. Today I'm here to talk about the view on commodities for next week. Talking about the last week, the main market focus, which was QE2, Fed's QE2, shifted to G20 currency and trade tensions. At first, robust macroeconomic data in China initially boosted market sentiment and drove the asset prices higher. However, speculation that the Chinese government will raise the interest rates dampened the risk appetite. First half of the week was very bullish for the commodities. Gold surpassed $1400 and traded at $1424, whereas silver continued making the 30-year high at $29.34 per ounce. Copper also traded to new record high at $8966. Crude oil traded at 2-year high above 89 as major oil agencies raised their forecast on global oil demand for 2010 and 2011. But on last 2 days of the week, commodities fell most in the 18 months on speculation that China will increase borrowing costs to damp inflation, eroding demand for crops, metals and energy. Raising rates has a negative psychological impact and will put a brake on the rising demand. The dollar rebounded across the board as the financial leaders and economists from around the world criticized US for easing measures. Gold got slammed to end the last week, falling $60. Silver fell 12% from its high. While move was big, the volatility is now par for the course in commodities. Thus, it is too early to tell whether any significant top has been made or not. Notably, last Friday's drop in gold took place despite a small decline in dollar index. Gold and silver correlation with euro dollar has fallen sharply over the past week, suggesting euro's weakness because of the sovereign concerns may not necessarily weigh on precious metal prices. Indeed, investors may turn to metals as a safe haven asset as they lose confidence in fiat currencies. While the long-term prospect remains bullish for the yellow metal, the performance in the near term is clouded by debt problems and the possibility of bailout in peripheral European economies, as well as the global trade and currency tensions. The G20 and the APEC meeting held last week seemed to have achieved little to resolve the problems. Lack of confidence in currencies should send gold higher, and after consolidation, gold could touch the level of $1500. Talking about other commodities, energy and base metal prices fell 4% from their recent highs, and amid this same speculation that the China will raise interest rate to curb inflation. Talking about the view of next week, crude oil, which is trading at $85, is expected to touch 80, and which could trigger bottom fishing in that commodity. Gold has support at $1350 and resistance at 1388, while silver has support at $25 and resistance at 26.90. Base metals would continue its downward trend with the major support in copper being rupees 380, nickel it is 1100, and zinc it is rupees 100. So happy trading for the next week. Thank you.